Okay, let's start the accounting concept part 2. In this part, I will talk about 3 concepts. Okay, so the third concept is going concern. Going concern concept talk about the business, that means our company, is assumed to continue in operation for the foreseeable future. Business is going to be continued in operations for the foreseeable future. Which means assume that this is for example, this is Mrs. Stanley, her company will last forever. We assume, okay, actually, some business may be closed in the later time, but we assume it will last forever. So, what is the effect or in application for recording accounting record? Is when we assume that going concern is used, we will use historical cost. If not going concern concept is used, that means renewed, the business will be closed later. We won't use the historical cost. Otherwise, we will use the net realizable value, which means the market value. So, going concern concept is the assumption of preparing the financial statements, because we have to record the cost of non-current asset. Okay, number 4. Consistency. So for the definition, consistency concept states the business should use similar or same accounting treatment. For similar transaction. From one accounting period to next. Okay, we can use an example. For example, when we need to record a non-current asset. For example, if we buy premises, we have to include some machinery in the premises. So let's find the machinery. Okay, computer. Okay, the depreciation should be using the same way for the future, because there are different ways to calculate depreciation that we will learn in the second term of Form 4. So we have to use the same way. That means it should be consistent. And you may ask, if we followed consistent concept, can we change the accounting treatments or accounting ways that we used in previous years? Actually, it's no, because we want to retain the stability or consistency. But if you have reasonable reasons or statement, you can show to the auditor that after changing the shipment, it will be more. It will be better to show accounting treatment. It can be yes. That means you should, before you change the accounting treatment, you should state some reasonable reasons or explain it in a reasonable way in order to change the accounting treatment. So we have talked about going home. We talk about business entity, historical cost, going concern, consistency, and the last one is accrual concept. Accrual concept means our income is recognized as it is earned. Not when cash is received. Okay, so how to express this concept is, now Mr. Tam showed a piano. So piano 500 on 2000 to business. Okay, but so later on, Mr. Stamp paid 500 to me on so which day should we question here? Which date should we enter? (12th of February or 31st of March? And the answer is 12th of February because we sold the PN note to Mr. Tam on 12th of secondary. That means the income is recognized on that date. Because we just haven't received it. So in another terms, our expenses are recognized when they are included. Not when cash is paid. Here is another example. This happened in it's about water expense. Usually we paid our water bill 3 months each, so that on September to December 2019, and we will get the bill on January 2000. So here is the question. What should we enter it? In our accounting record 2019 or 2020. Actually, according to accrual concept, the answer is 2019 because the expenses is recognized during September to December, not on January. So this example shows you that we have to record the water expense on 2019. So I hope this video may help you know more about the concepts.